What's up, guys? August 8th, it is a Wednesday, and this is my second trade in the month of August. We're red yet again, so all the more reason to analyze it. In this morning at 10:42 and again at 10:49, simply trying to average down there. Playing two contracts in total on SPY, the S&P 500, playing the 285 strike price contracts expiring Friday, August 10th, and I was on the puts. You'll see over here my initial entry was at 70 cents and my second entry at 62 cents. The chart will sort of explain why I decided to average down. So ultimately averaging 66 cents a contract and then finally out for a $40 loss at 46 cents on each contract, down 30%. So although options can be a great way to create high return on investment, they can also create high loss on investment. Something to keep in mind. So let's look at the chart. Looking at the daily chart here, you can see SPY is in the upper range of the channel it's been trading in. Ever since we made the move off of 280, looking good, and then yesterday finally finding some weakness at the 286 hold dollar mark, getting rejected, coming back down. This was sort of telling me SPY was not ready to make an attempt at all-time highs quite yet. We needed a little bit more consolidation off this move, and then we might possibly continue. Anyways, looking for the red this morning based on this overall setup. So this morning we opened. This is now the 3-minute chart, and we did see that initial red spike down, finding support quite quickly at 285.10, moving back up and forming this descending triangle pattern that you see here. We have lower highs showing weakness and support slowly waning. You can see we broke it there. Broke it a little bit there, and we showed some definite signs that we were going to break that support in this candle here. Now, last time I got in too early on the descending triangle and bought as we were breaking to the upside. This time I think I may have gotten in a little too late or just not factored in the volume. This candle here was showing me that yes, there was indeed some strength. It even got below that 285 whole dollar. And in my mind, I was expecting a back test, and we got the back test to this support that had turned resistance. And if I click here, that opens that up. You'll see this candle was out initially completely red to the downside. And from here, I was thinking, okay, we found resistance at the prior support. Perfect setup to get in and watch this thing roll over. So that green circle marking my first entry at 70 cents. So I was in here. I was playing the 285, so expecting a quick spike in price as we crossed into the money. That didn't happen, however, so we went back up and formed this doji candle you can see here. So a little bit of indecision, and at that upper resistance trend line, I was expecting, again, this thing to find some more resistance and come back down, so I averaged down thinking that, yes, indeed, the pattern still held true. So I averaged down. This is where I bought for 62 cents, and promptly prices spiked, and we were headed towards highs of day. And to give myself a little wiggle room this morning, I said that the 200 period simple moving average would be my stop loss, my mental stop. So I honored it. When we came up here, I got out at 46 cents. In hindsight, had I have held, yeah, of course this thing came back down to probably 50 cents. So I could have cut my loss almost in half, but is it worth it? No, not at all. This move right here showed plenty of strength. Look at how big and green these candles are. This thing could have continued to higher highs, and the bleeding could have continued. Very happy I stuck to the system, got out where I needed to get out, and prevented any further loss. So SPY kind of going sideways for the rest of the day. Should be interesting to see what happens tomorrow. Of course, seeing the red in the post market. With that, we'll wrap things up. Thank you for watching. If you learned anything, feel free to give this video a thumbs up. If you have any questions or comments, leave them below. And like always, subscribe if you want to see more of this content. There will certainly be more on the way.